Hello folks, you're welcome back. This is the second video for the 5 most important institutional reference points. If you're watching this for the first time, I'll need you to watch the previous video, which is talking about the 5 most important institutional reference points, so that you get to learn these institutional reference points in their sequence. Okay, we're talking about institutional reference point, but we're talking about the ICT breaker blocks today. The ICT breaker block is the second institutional reference point in its order of importance, following the mitigation block, and this guy has the power to scale up your trading performance if you master how to use the breaker blocks. There are 2 types of breakers: the ICT bullish breaker or the bearish breaker. Okay, so the bearish breaker is characterized by 2 things. We like to see price action create a high, higher low, higher high, then create shift of market structure bearish. As price returns into that low that was violated, that is the bearish breaker. We like to see that bearish breaker provide resistance for price action to trade lower. Okay, never forget, for price action to trade lower, never forget 2 things which are very important. 2 things which are very important: price taking at the high, price closing below the low, and closing below that low. That is a bearish breaker. The other one is called a bullish breaker. We like to see price create a low, lower high, lower low, shift of structure bullish. When price returns into that high that was violated, that is the bullish breaker. This should provide support for price action to go higher. 2 things to take note: price sweeping the low, price creating shift of structure. This is what makes a bullish breaker. Let's get to see examples on the charts that are very powerful, and all these examples are going to open your eyes to see these things. So take a look at this scenario. Price swept the low, price created shift of structure bullish right there. You see that price returned into the breaker. That was a buy into the next drawn. Liquidity residing above the relative equal highs right there. We're not talking about liquidity today, so we're not going to pay attention to showing you the drawn liquidity. We're just going to be looking at the breakers, only the breakers today. Okay, another scenario: price swept the low right there, created shift of structure bullish. Do you see that right here? That is a bullish breaker. Price returned into the breaker, and that was a buy. We're looking at bullish breakers now. Another example of a bullish breaker: price swept the low right here, created shift of structure bullish. You see how price returned into the bullish breaker. We bought this price action into the next draw on liquidity. This model is actually very powerful, even though there is more than just looking at the breaker and executing at the breaker. Then let's get to see examples of a bearish breaker. This is another one: price swept the high, price swept the low, closing below that structure. You see that we extended that low, price traded into that low, and we see the expansion lower. That is a bearish breaker model. You see that. Another example: price taken at the high, price closing below that level, traded into the breaker. Again, bearish breaker, sold to the downside. Again, this was retested many times. Price retested the breaker another time here, then we see it again here, then the 3rd and the 4th time, and sold massively. Here's another example: price taking out the high, closing below that low. That is a bearish breaker. Price returned into the breaker right here and sold massively into the next drawn liquidity. Again, I see another example of a bearish breaker right here: price take out the high, price close below that low, as extended, price traded into the breaker the first time, again for the 2nd time, and sold massively. So all these are examples of the breaker model for today. Very powerful, very efficient. All you need to do is to master this concept, and they are going to scale up your trading. This and many more are the benefits of joining us in the mentorship community, because we refine your understanding of trading. You get to learn my specific trading models. You get to learn my approach for risk management, my approach for trade management, my approach for fund management, all in the one-on-one mentorship community. All right. So I think we've had enough for today. If you're watching me for the first time, don't forget to click the like button, subscribe to this channel, and until next time, I wish you good luck, good trading.